we've got the most exciting topic for the breakout session. We're talking next-gen investing, and that's everything from actively managed ETFs, tokenization, and digital investing. The investment world can be daunting if you're starting out, and that's completely normal. Whether you're investing your first paycheck or looking for new ways to grow your wealth, understanding what's available today can help you make more informed decisions tomorrow. So joining us today is Trinisha Chanka, who leads our actively managed ETF strategy here at 91. Hello, Trinisha.
Thanks for having me, Senzo. So let me start with a confession. The first time I heard the word tokenization, I felt intimidated. I'm a bit of a tech fugitive, and I thought I needed to be a tech-savvy 20-year-old to understand it. But I promise you don't. So underneath all the jargon, these are just new, easier ways to access the same tried and tested investment strategies that have helped millions of people grow their wealth. A share is still a share, a bond is still a bond, and a balanced fund is still just that. We now have new ways that make it easier to invest in them.
Maybe let's talk a little bit about you and when you started investing 20 years ago. And what did that look like? And how was that different versus someone who's starting out today?
20 years, that does make me feel ancient. I started investing in unit trusts, still a very popular way of investing today, used by many investors and many advisors. And at the time, that meant filling out a paper-based application form, faxing it through, setting up a monthly debit order. And if you think about how much has changed in our lives today, a while ago, we weren't used to shopping online. Then COVID happened, and very quickly, we all got very familiar with ordering groceries online apps. Today, it's possible to invest on an online app within minutes from your phone. Many of the banking apps will allow you to do that. And this space is changing fast. More and more digital ways of investing are becoming available all the time, including some new and exciting things that are happening at 91. Recently, you would have seen in the news that one of the big four banks have made or are soon to make available investing via ETFs and shares to their entire customer base. So it's becoming easier and easier than ever before to access investing.
So thankfully, it sounds like it's much easier to invest. And I assume the minimums are maybe lower. But just let us know, how did you decide on what to actually invest in?
So 20 years ago, when I started investing, I had a few goals. You know, the more immediate ones were saving for my next pair of fancy shoes, going on a holiday. Then there were all the grown-up goals, like saving for a wedding or a home or kids and all that comes with that. And in truth, I didn't know what to invest in. I didn't know which shares to choose, but I knew that my colleagues that sat across the floor in the investment team spent their days researching and analyzing companies, thinking about which company would have better growth prospects, which sectors would fare better in certain economic conditions. And so I trusted them to make the investment decisions for me. I invested in the same investment strategies and with the same experts as I do today. My goals have changed, so I've moved from shoes to school fees, but I still rely on the same team of people to deliver the investment outcomes that are going to help me grow my money.
But listen, there's nothing wrong with a nice pair of shoes here and there. But I really like how you frame it to say the destination may have not changed, but how you get there actually has changed. So maybe let's dive deep into it a little bit. Actively managed ETFs, what are those in plain language, please?
Sure. So AMETFs, let's start and unpack that piece by piece. The AM stands for actively managed. It's active because there's an investment manager like 91 who is actively making the decisions on what comes into a portfolio, what goes out of the portfolio, be that shares or bonds or some combination of that. So there is a real team of people that have backed by proper research, deciding on which assets make the cut. It's very different from the more common passive ETFs, where these ETFs track an index like the top 40 shares on the JSE. And in those ETFs, there isn't any discretion around what goes into the ETF. If it's 40 shares, it's those 40 shares, and there are rules around how much get invested into each share. So importantly, the AM means that there's some judgment involved when picking the investments, and there's also judgment involved when balancing the risks that exist in the portfolio. ET stands for exchange traded. So the fund is traded on an exchange like the JSE. It means you can buy and sell the fund during the day. And then F stands for fund. So it's a diversified collection of either shares or bonds or a combination thereof that is importantly regulated and pooled together. So as an investor, you've got peace of mind that there's a level of oversight and control involved. So if you put everything together, it really is a diversified, professionally managed, regulated fund which trades on the exchange.
Wait, so hold on. So actively managed ETFs and unit trusts seem to be the same in the sense that you have an underlying investment process and they're also regulated. So what is the actively managed ETF hype about, and why now?
So I often use this analogy about ice cream. You can get the same yummy ice cream. It's just you can now choose whether you'd like to serve it in a cone or a cup. And the same thing applies for ETFs or active ETFs and unit trusts. It's the same underlying investments. So, if you're a long-term investor and you're saving towards a goal that's 10 or 20 years away, whether you invest in an ETF or unit trust is not going to make much of a difference. The core difference at the moment is that, like I explained, the ETF is something you can buy on an exchange, so you can buy it throughout the day. That's not going to make a massive difference for you if you've got a goal that's 10 or 20 years away. But there is a certain category of investors who are already sitting on those banking and trading apps, who now for the first time have access to this professionally managed solution. They in the past would have possibly been choosing their own shares, and they may want to give that to a professional manager to do it for them, or they might only have had the ability to choose these index tracking alternatives. And tracking local and global markets these days has become very concentrated. So in South Africa specifically, last year, there was a huge run in the market based on gold and platinum shares. And today, if you are invested in the local market, you've got a lot of exposure to those shares. Globally, you've got a lot of exposure to AI shares. So you now have the opportunity to diversify away from those exposures and let a manager balance those risks and balance those exposures for you. So it's not really the product that's changed so much, but more that there's investors now have a wider choice of investments available to them, and they've got more freedom in how to invest their money.
What about considerations like costs? I know that's really important to investors.
So ETFs, like I said, have traditionally been associated with index tracking alternatives. Those types of investment strategies are usually cheaper than one that's managed by a team of experts that need research in order to make those decisions. At 91, we've made the explicit choice to have our unit trusts and our active ETFs priced in exactly the same level. So there's no incentive to choose one over the other from a cost perspective. Ultimately, it comes down to the investor and your preferences and whether you'd like to trade on exchange or whether you'd like to trade in the unit trust. The unit trusts have served investors well over the last 60 years. There's a lot of money invested in unit trusts, and I think that will continue. ETFs are just a new way of accessing the same strategies.
Give us a sense of scale. How big is the ETF industry?
So globally, the ETF industry, including active ETFs, are about $23 trillion. Most of that sits in the US, so about 70% is currently in the US, and the US has grown really fast because it's the only country where there is a tax advantage of the ETF versus the unit trust equivalent. In South Africa, ETFs and unit trusts are taxed in exactly the same way, so there is no advantage. The ETF industry in South Africa is still quite new. ETFs themselves have been around for 25 years. Active ETFs have only been around for the last 2 to 3 years, so very new. But the industry is growing fast. It's tripled in the last 5 years, and it's the growth that we're really excited about.
And in your mind, what is driving this growth?
So I think it's the investor behavior themselves. Investors today, there's a lot more younger people that are thinking about investing. As you know, younger people are much more digitally native. They expect to manage their entire lives on their phones, including their money. They really prioritize speed and accessibility. So for them, they don't want to wait days to do paperwork. They want to trade and see their investments in real time. Younger people, I think, are also more globally minded. So they want to invest outside their home market. And they are, more comfortable with new technology and new investments rather than previous generations. And I think we see this in the data. So over the next few years, we expect there to be a large wealth transfer as younger people inherit more. And that matters because we're building next generation ways of investing for the next generation.
Thank you for that. So it seems that actively managed ETFs are still the same way of investing when you look at unit trusts, but what's actually different is the way to access it. And so I think we can tackle the next part of our session, which is tokenization. What is tokenization?
So I started my session with a confession, and I think the proof is in the pudding on whether I'll be able to explain that eloquently. So tokenization means taking a real world asset like a share or bond or fund and really just creating a digital record of your ownership in that share or bond or fund. So you can think of a digital wallet on your phone which carries reference to your bank card. That is a digital representation of money sitting in your bank account. And tokenization is doing something similar. It's creating a digital record of what exists in the real world already. Now, it's important not to confuse tokenization with crypto, because crypto, in fact, sits exclusively on the blockchain, whereas tokenized assets always have a real world asset backing them. And if we go back to the ice cream analogy, a tokenized asset has got the same underlying share or bond or fund attached in the background. It's just that those investors now want to trade even more frequently. So it's a step on from actively managed ETFs. Actively managed ETFs allowed you to trade while the market was open, during the trading day. Tokenized assets allow you to trade 24/7. So it's like buying your ice cream from a vending machine. It's never closed and you can access it instantaneously.
When you started explaining it, I was thinking it sounds like we're living in such a futuristic world, but the way you linked it to bank cards really landed for me because I have my bank card on my phone. And so, but on tokenized assets, are people investing in these right now?
So let me give you a sense of scale. It's definitely much smaller than actively managed ETFs. You'll recall earlier we said that the global ETF industry is about 23 trillion. If we think of cryptocurrencies, which is the most popular or well-known, it's not the same as tokenized assets, but to give you a sense of scale, there's about $2 trillion globally of crypto assets, so about 10% of ETFs. And if you think about tokenized assets, the bulk of it currently sits in tokenized cash like stable coins or tokenized money market funds. And currently there's about $300 billion globally. So it's small, but it's also growing fast. And I think there's two important things to think about when you think about tokenized assets. The first thing is in that 20 to 30 years time when my kids are investing, the whole investment world is likely to be tokenized. So this is definitely where we're heading. And the second thing is that it enables investors to access investment strategies that they wouldn't have otherwise been able to. So in this theme around lowering minimums and making investments accessible to more people, think about an asset like infrastructure. It costs a lot of capital to build, a new hospital or a new bridge or a new road. And in the past, it's usually large pension funds that would have been able to invest in those types of assets. Tokenization will allow us to break down those real world assets into digital tokens that allow smaller investment sizes, and by doing so allow people who don't have as much money to invest in new assets.
It really does sound like there is a lot happening in the investment industry, but I want to bring it back to the room for a moment and just ask, why does this matter for the women here today?
So as women, I think we're always so busy, right? We're juggling our families, we're juggling careers. Our own finances are really at the bottom of the list. And we've spoken a lot about how these new ways of investing make it easier and faster for all the ladies on this call to start investing. And I would encourage everyone on the call to really look at their investments, think about starting small, think about starting now, because every little bit counts.
And so, just before we close out, how is 91 thinking about all of this?
So at 91, we're always looking for new ways to add value to our clients. As our investment teams have spent the last 35 years using our investment expertise to deliver investment returns to clients, our job is to use the new technology that's available to meet investors where they are. We've spoken about active ETFs as one answer. They're meeting the needs of the new generation, and the more they want easier, faster digital. We've started with 2 active ETFs in South Africa. We've got a few more in the pipeline. Globally, we're also launching ETFs within the global space. We've just partnered with State Street. That is a hugely exciting initiative. There's 2 things to really take out of that. The first thing is that, active professional management has a real role to play. So State Street is one of the largest managers in the world, and they think active management has a place. So as an individual investor, if you look at your own portfolios, you might want to look at whether there is an opportunity to diversify into active. The second reason we're so excited about the State Street partnership is, they could have chosen any active manager globally, but it's a real feather in our cap that they chose 91. So it's recognition of our global investment expertise. We're taking that and we're making it available to more investors. And then lastly, on the tokenization piece, there is a tokenized product that's likely to go live in South Africa very soon. That will be the first on the continent. And essentially, I think, as a closing thought, there's lots on the go. I've shared my personal investment journey during this conversation. We've shared the journey that we're on as 91. And, I hope we've inspired the audience to start your investment journeys. Please visit our actively managed ETF hub on the website. You can find out more about what you can invest in. Think about starting now, and just think about how you bring your investment goals one step closer.
Trinisha, thank you so much for taking us through what feels like the present, the future, and beyond with everything that's happening in the investment world. And so to everyone here, thank you so much for spending your time with us today. And we hope this session has left you feeling more comfortable about understanding the different investment options that are available to you. And a reminder to check back into our Women and Investing Hub, which is filled with additional content for you to explore. And remember, the tools are changing, but the destination hasn't. Your finances, your future, your move. Until next time, thank you.